Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Well, it finally happened. We got an interest rate hike from the Federal Reserve of 0.25%. Today, we need to talk about what that actually means for you on an investor side of things and what to expect. Now, we've been talking about interest rates for a while on this channel, so this should not come as a surprise. If you subscribed this week, you definitely heard me talk about it. If you've been a subscriber for a year or more, you've probably heard me talk about it, and we finally got that. So I'm not going to explain what interest rates are and how we got here. We did that in yesterday's video. Feel free to go back and watch that one. However, what you do need to know is what to expect and perhaps avoid a trap, which is, I can almost guarantee you, is about to happen to a lot of new investors, but also talk about opportunities that you may have in the market as well. Now, here's the thing. The market was up tremendously today. It was up, I think, the S&P 500 was up 2%. Tech stocks, which when we say tech stocks as a whole, we generally mean the NASDAQ that comprises of pretty much all the tech stocks. That was up close to 3% today. And everybody's excited that the market is up. We haven't had a whole bunch of great days this year as investors, and this was one of those. And this is the point where people kind of fall into a weird trap. People will say, oh my God, the market is up. It's time to get back in and buy everything you can. And then tomorrow or one of these days here pretty soon, the market falls and then we're all confused as to what happened. And you didn't have realistic expectations or misplaced expectations rather. And this is where people again get hurt. So for example, I know PayPal for a fact was up pretty big today. And this is not me hating on PayPal again, even though you could call me a PayPal hater, but PayPal was up pretty big today. I guarantee you, some say, "Oh my God, this is time to buy PayPal," and then some stuff is going to happen right around the corner that could return PayPal back to like the 90s. By 90s, I mean like $90 or so, $99, whatever it was. Because I think today was at close to 106. At least when I looked at it, it was up pretty big. It was above 100, and it could be right back down in that 90 range should these things occur. So I want to help you to avoid that. Now, what is this thing, and how do you avoid it? Well, one of my good friends, the Wall Street Junkie, and you can see his tweet, and his tweet is here, but he's also really good on Instagram and TikTok. And I'll read off something that you should be aware of when the Federal Reserve raises interest rates. Now, as you are looking at it, as I'll read off some things on the screen, remember that no, history doesn't predict the future. It doesn't. Especially in 2022, because in each of the years that you see here, we weren't necessarily in a war, though you could argue that as well. However, every year is different. Things are going to be different. But again, history doesn't always repeat itself, but it could rhyme. So when the Federal Reserve first raises interest rates, history tells us, when they raise interest rates 0.25%, which is what they did after the first rate hike, here's what happens. The market tends to take a dip, which I've said plenty of times before. And in this case, the average dip here is 0.01%. So in February 94, the market within the first 3 months, not the entire year, the first 3 months, the market fell by more than 5% in 1994. In 97, the stock market actually took off, so hopefully that happens. We'll see. In 99, it fell 5%. In June 2004, it fell 1.35%. In December 2015, it fell only 0.58% within the first 3 months. Now, last I checked, we're not even done with the first 3 months of 2022, but do expect that. I would personally expect the market to be a little choppy within the first 3 months. Again, it doesn't predict the future, but here's what we know. Now, the Federal Reserve has raised interest rates to slow down inflation, so hopefully that starts to pay off. The Federal Reserve is also expected to continue to raise interest rates throughout the year. I think the number was 6 is the headline that I saw. So it's going to continue. But on average, from what we've seen, the market does dip. So there could still be an opportunity, which means that if a stock was up great today and you hop into it now, you might have bought at the top. Okay, I'm not saying that you did. Depends on what you bought, what your goals are, and a bunch of other stuff. But that's the trap that people fall into. It's like, oh, it was up, let me buy it, not understanding context here. And the history tells us that, next 3 months, it ain't going to be nice. Okay, there may be some other opportunities down the road. Only one of the, 5 times, only 1 out of 5 times that within the first 3 months, the market was actually up. just once. All right, now the next 6 months, things look a little bit better. You always look at me when I say, hey, wait 6 months, let things play out. Wait 6 months, maybe a year. I say 6 months to a year. You see why now. You see why I do that. I don't just make up numbers out of nowhere. And as you see here, you wait 6 months, things get a little bit better. Now, February 94 still wasn't great. So it was down 4%. 97, it was up 20% after 6 months. 99, it was up 8%, 8.72. 2004, 8.8, and in December 2015, up just 2.88. On average, it's up about 7.43%. Great. And then you move over into the next 12 months, which is even better. On average, the market is up 15% after that first rate hike. So today was that first rate hike. And immediately, I won't say immediately, but then this first 3 months, I would pay attention and do your research to see what you can get, what discounts can you get, and pick those particular companies up that you've already researched or you can research and hop into it. I don't think that you need to rush out and buy stuff right now because interest rates are up. I don't think that makes sense. History tells us you're going to have more opportunities. But here's the other thing that I'm even more concerned about. Remember, it's still an election year. We have midterm elections in December. In November, we'll see how that plays out. I don't have any reliable data at this point in time to tell you what's going to happen there and how that can impact the stock market. I can tell you that it's probably going to impact the stock market, though. I will say that. The other thing is we still have the war in Russia and Ukraine. That's going to have an impact regardless of where rates are, and also oil prices. Again, last I checked, we still aren't getting oil from Russia, which is probably a good thing, but that's still going to hurt our supply and demand. Oil had actually fallen the last 2 days or so. There's no guarantee that it's going to stay down. Now, for me, gas prices actually dropped. It was $4.19 like 3 days ago. But today it was $3.99, which again, great for me and people who use gas. But aside from all of that, right, that was just an adage. But aside from all of that, that's how oil prices change is still going to impact the market. What we've seen so far, and it's a small sample size, when we see headlines that say the oil price is above, $110 a barrel or whatever it is, basically oil price goes up, stock market goes down, and vice versa. That's just what we've seen just in the last 2 weeks or so. I don't know if that's going to hold up, and I can't tell you whether or not interest rates is going to solve the oil issue. I don't think it does. However, just be aware of that. My thing is I want you to walk in with accurate, I don't want to say representations, accurate expectations so that you don't fall into what I call a trap where things seem great, right? I did a video last week about us having the best day since, 2020. So we had the best day in 2 years. Market was down. Today we had a very good day because rates were going up. This is not over yet. Not only is it just not over for the sake of it not being over, and the year is not close to being done, the other part is, again, the Federal Reserve is expected to continue to raise rates. And the expectation thing is something that happens in the stock market too, just like you and I do, right? We are reading reviews for a movie or a TV show, you're like, oh my God, it's gonna be great, and you yourself hype it up to a certain degree, and you go and see it, and it's good, but it just wasn't what you expected. Then the market, you're like, it was good, but it wasn't what I expected it to be. Well, the same thing can happen for the market as well, where we raise interest rates, and let's say we get an inflation number in the next, month or so, and it's still high. What is the market going to do then? Okay, we are going to continue to raise interest rates every quarter or so, and it's going to continuously inch up a bit. How does the market continue to react? Remember, the market is not always rational. You can raise interest rates, do the right thing, and the market still falls. And then you got Ukraine, and then you've got oil. There's a lot of stuff still out there, so don't be overexcited today, and don't be overly, I don't want to say use depression, but don't be overly negative today either. Be even keel if you've been looking for some stocks that you thought were too expensive. Between now and the next, 8 to 12 weeks, this would be the time to kind of do that research and find those things that you may see as a discounted price where, the market could dip. This would be the opportunity to pick those up. Now I've always talked about bank stocks or been talking about those before. Could this be a time, like for me, even though I hopped out of PayPal and Square, this might be an opportunity to go back and research those. I didn't say buy it. I'm not putting it on nobody's watch list right now. However, now we're starting to see interest rates come up. I don't really care about today's numbers because I know it's going to happen today. However, or we saw what happened today rather, this is the time to kind of sit back and say, okay, I see rates moving up. Let's see how they do, right? Keep a close eye. For me, I'm keeping a close eye on those. I have plenty of stocks we're looking at. Y'all saw the watch list. So just be real careful. Don't use this as an indicator of the rest of the year is going to be awesome. I hope it is. The rest of the year is going to be like today in the market. I will take it. Okay, I will absolutely take it. However, you don't want to get overexcited and really, take a long walk off a short cliff, is what we say in the country. But basically say, look, it was up. I'm gonna, put everything in here. I'm gonna time the market, and things are gonna be great. You got a lot of headwind, or I wouldn't say headwind, a lot of obstacles that may still be in your way, and you might be walking through them with a blindfold on, or even rose-colored glasses. Whatever metaphor you want to use there, but you get the point. All right, so that is it for today. The last thing that I'll tell you is remember, the code subscriber for the Investor Toolkit does expire tomorrow on Thursday. So it's your last chance to save $300 on the Investor's Toolkit. I help you to learn how to invest without a lot of the confusions. I've gotten a lot of comments over the last few days saying, look, I love the videos. You make a lot of sense. You make a lot of complicated stuff very simple. That's my job. That's what the Investor's Toolkit helps you to do. It helps you to take your investing game, take your investing strategy to the next level. Your 401ks, your trading, all that stuff you can improve with the Investor's Toolkit. You can do the payment plan. The first payment is just $49 if you use the code subscriber before it expires tomorrow. All right, that's it for me. I'll talk to you guys later. Bye.